Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Michael Sonnenshein, managing director at Grayscale, a global leader in digital currency asset management, to discuss how the pieces are coming together for crypto as an investable asset class with true staying power. Michael, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me. Great to see you too.
And I'm glad that I was able to book you back in November for this week specifically, because it could not have been better timing. Let's talk about the year in Bitcoin and crypto in general, just the year that the asset class has had.
You know, it's been a year unlike we've ever seen in crypto. I think when we look back to this past spring in March, we saw the world come to a grinding halt as COVID took hold of the global economy and the world over. And you saw massive, massive sell-offs across really every asset class. And actually, crypto and Bitcoin, even more specifically, really bared the brunt of a lot of that sell-off, even more dramatically. Sold off probably over 50% in a single day. And really over the course of this year, Bitcoin has really demonstrated its resilience for the investment community. It has gone on to become one of, if not one of the highest returning investments this year. And the staying power that it's had in investors' minds has been tremendous. You've seen companies adding Bitcoin to their balance sheet as a reserve asset, companies like Square and MicroStrategy. You've had famous investors coming out publicly in support of Bitcoin and allocating to it, Druckenmiller, Paul Tudor Jones, et cetera. You've seen financial services incumbents like PayPal begin offering crypto to their merchants and users, both to buy and sell, as well as to use in transactions. And so you're really dealing with an environment of factors that has just really never been at play within the crypto ecosystem before.
The comparison to 2017 is constantly being made, and I would argue this is nothing remotely close to that. Would you call this year an inflection for cryptocurrency? Have the pieces finally fallen into place?
It is most certainly an inflection point. I think it's an inflection point most so around who is getting involved in this asset class and why they're getting involved. I certainly can say at Grayscale, we've now skyrocketed to over 15 billion in assets under management, and about 80% of our inflows are coming from institutional investors. And we never saw this level of institutional participation. Certainly was ramping up over the last 12 to 18 months, but it's now the largest it's ever been. And we're really talking about everyone from global macro funds, risk arb funds. It really runs the gamut from all different kinds of investors. And I think the confluence of that institutional capital very meaningfully flowing into the space, as well as with all of the picks and shovels around the industry really being developed, right? Broad development of the futures market. We now see Ether is going to be a futures contract on the CME some point next year. The development of the lending and borrowing market around digital assets. We're really talking about a healthier two-sided market that has never really existed, and certainly was not the case when we look back at the 2017 rally.
Would you say it's still early days? Because at the end of the day, the asset class is just over 10 years old.
It is early days. You know, having been in the space now for the past 8 years, you know, I sometimes pinch myself and have to remind myself that we're only, you know, a decade plus into the development of this asset class. And to see how much it has been accepted and pervaded, you know, financial services incumbents, and how much acceptance and attention it's received from the regulatory community, the investment community, and really just the world over, it feels like we're just on the brink of really seeing much more adoption in the space. But no question about it, it is still early days, which is why we always caution people as you think about investing in this ecosystem. It's early days. Do not put more into this asset class than you may be able to afford to lose.
On Monday, December 21st, Grayscale announced crypto trusts are being closed off. And if I'm correct, that was misconstrued as news since these are closed regularly. Can you give us more detail on that?
Yeah, our products, private placements go into regular administrative quiet periods. And so this is part of our regular course of business, not having anything to do with any other dynamics out there other than just our regular administrative quiet periods.
And finally, Michael, to wrap up, what's your outlook for 2021?
Well, if momentum is any indication, I would say that 2021 will likely be even busier than 2020 has been. You know, having raised now about $4.5 billion so far in new assets this year, we continue to kind of break records quarter after quarter at Grayscale with new investors showing up, with new investment theses around this asset class. We're seeing that momentum continue to carry and gain steam quarter after quarter. And so I have to believe that given the state of the world and the fact that this asset class has really identified the staying power that it has in investors' minds, 2021 is going to be a very busy year.
All right, Michael, appreciate the insight as always. It's been great having you on the show to build up this story. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.